GameStop's 73% surge, how a $116 million bet from Roaring Kitty ignited the market. Shares in GameStop shot up almost 73% in pre-market trade Monday, marking another chapter in the ongoing saga of meme stocks that shows little sign of abating. The video game retailer's stock soared following a Reddit post by the influential stocks commentator Keith Gill, also known as Roaring Kitty. Gill revealed that he had purchased nearly $116 million worth of GameStop shares, igniting renewed interest in the stock. Gill's post was particularly notable as it was his first on Reddit in over 3 years. The timing of his return to the platform is significant, given that social media-fueled hype around GameStop shares was at its peak during his last active period. This resurgence in Gill's activity has drawn considerable attention from the trader community, many of whom remember the dramatic events of 2021. Meme stocks are characterized by their volatile price movements, driven more by their popularity among social media trader communities than by the company's fundamental business metrics. The phenomenon gained widespread attention with GameStop in 2021 and quickly spread to other companies such as AMC Entertainment and Bed Bath & Beyond. These stocks became the focus of retail investors who use platforms like Reddit to coordinate their buying strategies, often targeting companies with high levels of short interest. Keith Gill, known by his online moniker, Roaring Kitty, has played a central role in the meme stock movement. His posts on the Wall Street Bets subreddit have been instrumental in driving up the price of GameStop shares. Wall Street Bets is a popular thread on Reddit where users discuss stock trading strategies and share investment tips. Gill's analysis and enthusiasm for GameStop resonated with many retail investors, leading to a dramatic increase in the stock's price as they collectively bid it up. In his recent Reddit post, Gill disclosed that he had acquired nearly $116 million worth of GameStop stock. This substantial purchase signaled his continued confidence in the company and inspired a wave of buying from other retail investors. The impact was immediate. GameStop stock surged almost 73% in pre-market trading, a testament to Gill's influence and the power of social media in the modern financial landscape. The effects of Gill's posts were not limited to GameStop alone. Shares of AMC Entertainment, another popular meme stock, were up nearly 28% by 6:47 a.m. Eastern Time on Monday. Like GameStop, AMC has experienced significant price volatility driven by retail investors on social media platforms. The coordinated efforts of these investors have led to substantial gains for those who bought in early, although the stocks remain highly speculative and risky. Gill's influence extends beyond Reddit. Last month, he posted a meme on X, formerly Twitter, of a man leaning forward in a chair holding a video game console. This was his first post on that platform in 3 years, and was seen as a signal to his followers that he was re-engaging with the GameStop narrative. The meme, interpreted to mean, "When things get serious," resonated with his audience and led to another surge in GameStop stock. The power of memes in stock trading cannot be underestimated. Websites like Know Your Meme track the origins and meanings of popular memes, providing insight into how they influence market behavior. In Gill's case, His use of a simple image was enough to spark a significant movement in GameStop's stock price. The events of 2021 are still fresh in the minds of many investors. During this period, GameStop's stock price soared from under $20 to nearly $500 in a matter of weeks. Retail investors, inspired by posts on Wall Street Bets, targeted short sellers who had bet against GameStop. By driving up the stock price, these investors created a short squeeze, forcing short sellers to cover their positions at a loss and further fueling the stock's rise. Short selling is a strategy where investors borrow shares of a company and sell them, hoping to buy them back at a lower price. If the stock price rises instead of falling, short sellers face potentially unlimited losses, as they must buy back the shares at a higher price to return them. The coordinated efforts of retail investors in 2021 led to significant financial pain for many hedge funds and institutional investors who had shorted GameStop. In 2021, Gill testified before the U.S. Congress about the GameStop mania. He described himself as a casual daytime trader and insisted that he did not set out to instigate the frenzy. Instead, he argued that he believed GameStop represented an attractive investment opportunity. His testimony highlighted the growing influence of retail investors and the changing dynamics of the stock market. Gill's actions and the broader meme stock phenomenon has sparked debates about market regulation and the role of social media in trading. Critics argue that the volatility created by meme stocks can lead to market instability and significant financial losses for inexperienced investors. Proponents, on the other hand, see it as a democratization of the financial markets, where individual investors can challenge the dominance of institutional players. The resurgence of GameStop and other meme stocks underscores the ongoing impact of social media on financial markets. Keith Gill, through his posts and memes, has once again demonstrated the power of online communities to drive significant movements in stock prices. While the long-term sustainability of these stocks remains uncertain, their influence on the market and the conversations they generate are undeniable. As retail investors continue to leverage social media platforms for trading insights, the dynamics of the stock market are likely to keep evolving in unexpected ways.